I have dreams of retiring a millionaire. The only problem is that I'm stuck here working this really low salary job. In fact, I'm only making about $30,000 a year here, and so I don't really think retiring a millionaire is in my future. Not so fast. Who are you? It's me, Joshua Mayo. And I'm here to tell you that anybody can retire a millionaire, including you. It's actually a lot more doable than you probably think. All you need is a little patience, some discipline, and to watch the rest of this video and drop a like down below for the YT algo. Now, I'd like to bring your attention to this guy right here. His name is Ronald Reed. He was born in 1921 into a poor family of farmers and worked as a janitor and gas station attendant most of his life. He was a normal, modest guy. He enjoyed collecting stamps and coins and eating breakfast at Friendly's. By all standards, Ronald was a regular guy. However, there's one part of the story that I forgot to mention. Outside of his stamp collection and his tattered appearance, Ronald had a secret. When he died in 2014 at the age of 92, it was soon discovered by his friends and family that he had amassed a fortune, an $8 million fortune to be exact. But how is that even possible? How could this kid right here, born into a poor family and living his entire life earning a small income, build up such a huge fortune? The answer lies right here: investing. But it's not really enough to say that he invested his way into building his wealth, right? Because that leaves a lot of questions, like what exactly was he investing in? Or how long was he investing? Or how often was he investing? And so there's a lot of questions that need to be answered, and if you actually have a goal of retiring a millionaire while earning a low salary, then you're gonna need some kind of blueprint. And lucky for you, you clicked on this video and I happen to have that blueprint, okay? So here it is. The first part of this blueprint is going to be to start setting money aside from every paycheck. Now, I'm not gonna leave you hanging by saying save your money, right? We all know that we should be saving our money. It's a good habit to have, but it's really difficult to actually follow through on and implement into your life on a long-term basis unless you actually have a plan in place. And I happen to have a plan that I use in my life that works really well for me that you guys can implement into your life as well. And so here's that plan. Step 1, automate your savings. I have it set up so that each week money is automatically moved from my checking account into my brokerage account where it's then invested. The reason that I automate this process is because it helps me to basically remove any obstacles that would get in the way of me saving money. So for example, how often have you said to yourself, I've really got to start saving money. You know what? I'm gonna start off by saving $50 from this week's paycheck. And then when payday rolls around, you either forget that you said that you were gonna save that money, or you convince yourself that you don't need to save that money anymore, but instead you go and spend it on something else that you don't even need. This happens all the time, and what I've found is that by automating this entire process of saving, you basically remove any of the friction involved with saving. And because all of this is happening in the background of your life automatically, you kind of forget that you're saving money in the first place, because the moment you get paid, that money is taken out of your account and put somewhere else. And so it's almost like it was never even there in the first place, and so you're not really missing out on anything. But then in the background of your life, your wealth is slowly being built because you're slowly saving money from every single paycheck, and that money that's being saved is then being invested, and your wealth is slowly being built without you even realizing it. Step number 2, determine how much to save. So I've taken the time to lay out this oversimplified table here on the screen, and what you'll notice is that I've given you a breakdown by age of how much money you'll need to save every single week and invest in order to retire a millionaire. Now feel free to go back to that part of the video and pause it on the chart so that you can take a closer look at it, but one thing that you'll notice is that it doesn't require a lot of money at all, depending on your age, to reach that $1 million mark. But what it does require is that you invest your money consistently, whether it's weekly or monthly, whatever works best for you. But if you are consistently investing your money into the stock market over a long period of time, then it's inevitable that you will be a millionaire if the stock market continues to give returns like it has in the past. Now, I'm gonna put the chart back up on the screen here, and I just wanna clarify something really quick. These numbers are based off of a 12% return, assuming that you invest your money into a low-cost index fund or ETF, something like VOO, which has returned a little over 15% on average each year over the past 10 years. I'm just bringing that number down to 12 to be on the conservative side and also make up for inflation. Let's just say, for example, though, that you're 30 years old right now and you don't plan on retiring until you are 70. I mean, after all, that is the new retirement age. And if you can simply invest $25 per week or $100 per month over the next 40 years, you would clear $1 million at retirement. And if you're younger than 30, fantastic. That means you have a lot more time and you can invest less money over a long period of time to still hit that $1 million mark. And if you're a little bit older than 30, that's still not a problem. Obviously, the more you progress in life, the more catching up you'll have to do with your investing. But if you're still in your 20s, 30s, and you start saving and investing the amount that you see on the screen, then you will without a doubt retire a millionaire, especially if you can follow the next two parts of the blueprint. And that brings us to part number 2 of the blueprint, which is to invest the money that you save into a tax advantaged account. And more specifically, the Roth IRA. Now, the reason that I love the Roth is because it allows you to invest your money and build wealth without actually being taxed on all of your gains. So for example, let's say that you spent the last 30 to 40 years saving and investing your money and you finally passed that $1 million mark. But what's even better than the $1 million though is that the moment you start taking money out of your Roth IRA to live off of as income during retirement, that money will not be touched at all by good old greedy Uncle Sam. And the best part is that a Roth IRA is completely free to open and it's super easy. It takes like 15 minutes. You can do it at any broker. Wink, wink. Click the link down below if you want 2 free stocks from Webull. Well, at this point, I know how much money I should be investing and where to invest it. But my next question is, what should I be investing in? My friend's uncle said that I should be investing in some kind of penny stocks or something like that.
I had a coupon for that.
The good news is that you don't have to be an expert investor to be successful. Even if you know nothing about investing and you have no desire to learn anything about investing, you can still be successful and retire a million. Now, the best and easiest way to invest in the stock market is going to be to invest in broadly diversified index funds or ETFs. Now, if you've been watching my channel for some time now, you know that I love talking about index funds and ETFs. They're my personal favorite way of investing in the stock market because they basically just allow the average investor to get amazing returns in the stock market without having to know a lot about investing and without having to spend too much time researching individual stocks. So for example, let's say that you wanted to invest in the S&P 500, which is an index that tracks the 500 largest companies in America. Instead of going and buying all 500 stocks that make up the S&P 500, you could simply go and buy shares of an ETF or index fund that tracks the S&P 500. For most people, including myself, I don't have time or the desire to go and research individual stocks, knowing that I can just simply go and invest my money into a well-diversified, low-cost ETF that's going to invest in thousands of stocks at once and give my portfolio exposure to an entire index instead of just individual stocks. So just a really quick recap, okay? Invest your money into a low-cost index fund or ETF inside of a tax advantage account, preferably a Roth IRA, and preferably over a long period of time, like 30 to 40 years, to really give your money time to grow and compound. And number 3, the final part of the blueprint is to let the power of compounding take over once you begin investing. If you don't know what compounding is, Albert Einstein once called it the 8th wonder of the world. And he's also said about it that he who understands it earns it, and he who doesn't pays it. So what exactly is compounding and how is that going to help me to retire a millionaire, especially while I'm stuck working here? So in very simple terms, compounding is when your earnings from your investments are reinvested back into buying more investments, and then those new investments earn you more money, which is then reinvested back into buying more investments. And this cycle just continues on and on and on until you've got this massive growth. Now, earnings could be from dividends, which are typically paid every quarter by dividend paying companies. It could be capital gains from when you sell stocks and you earn a profit from that, a capital gain. But to kind of help you understand compounding a little bit more, I'm going to give you an example here, and we're going to play a game of would you rather, okay? So would you rather have somebody give you $1 million at the beginning of next month, just one flat check, here you go, $1 million, or would you rather somebody give you 1 penny at the beginning of next month? However, that 1 penny doubles every single day for the next month. If you chose to receive the $1 million at the beginning of next month, that's fantastic because that's still $1 million. However, I'm afraid to tell you that you missed out on $4.3 million additional dollars than if you would have went with the 1 penny that doubled every day for a month. So if a penny doubles every day for 30 days, by day 30 it will have compounded to over $5.3 million. And while compounding in the investing world doesn't quite work exactly like this, it still serves as a solid example of the power of compounding. As you can see with the penny, it wasn't until around day 20 near the end of the month that you really start to see some significant gains. And because of the compounding effect, those gains got larger and larger with each passing day. And the same exact thing is true with your investing journey, right? At the beginning of your investing journey, you're investing, $25 or $30 per week, and it seems like nothing's really happening. It seems like it's going to be impossible for you to reach that $1 million mark by the time you retire. But if you continue investing a little bit each week or each month over a long period of time, Just like with the penny example, what you'll notice is that about halfway through your investing journey, you'll start to see exponential growth. Even if we were to look at a real life example, okay, let's say that you're investing $25 per week over a 40-year period with a 12% return. It's not until about halfway through the 40 years that we really start to see compounding take effect. But at that 20-year mark, as you can see here, the growth becomes just uncontrollable. It becomes exponential. And that growth that you see on that chart is just from $25 per week over a 40-year period. Imagine if you got even more aggressive and say you doubled your investment to $50 per week or $200 per month. Well, now you've essentially doubled your wealth at retirement. And the more aggressive you invest over a long period of time, the more wealth is built through compounding. And the absolute best part about this is if you follow part 2 of this blueprint, investing inside of a Roth IRA, then all the money that you earn is going to be tax-free. Okay, so if you made it this far into the video and you have not already dropped a like down below for the YT algo, that would mean the world to me if you did that. Also, it would mean the world even more if you subscribed to the channel and showed me your support. Guys, I appreciate you so much, and as always, I will see you again very soon. Take care.